Imagine your home. It's probably one of the biggest investment you have made. Now think about what would happen if something bad like a fire or a break-in were to damage or destroy your home. That's where home insurance comes in. When you buy a home, especially if you use a loan, your lender may require you to have home insurance. This is because it helps protect the investment. But even if it is not required, it's a smart move to have insurance for your home. Hi, my name is Kritika Kathal. I'm a certified financial planner and I'm committed to help Indian professionals plan their way to financial freedom. In this video, I'll walk you through the essential steps to understand, choose and secure the right home insurance for your needs. Step number 1 is understanding the basics of home insurance. Home insurance is designed to cover different types of properties, not just houses, but also condos, apartments, and even your personal belongings. However, it is important to note that home insurance typically covers the building and not the land it sits on. So if let's say your house is worth 75 lakh, you might only need 65 lakh in insurance because the remaining 10 lakh could represent the land value. Home insurance usually has two main sections. The first part, that is section 1, focuses on protecting your property. It is divided into 4 subsections. Coverage A primarily protects the main dwelling and attached structures. Except for building materials that I mentioned earlier, only the buildings are covered, land is not covered. Coverage B protects buildings that are not attached to the dwelling. Coverage B also covers fences, decks, and swimming pools. Normally, insurance protections are not extended to business use of other structures. Coverage C protects an insured's personal property on or away from the property. This protection extends to any property the insured may use but does not own, such as a tool borrowed from a neighbor or a friend. And coverage D protects against the loss of use of the dwelling. When insured property is damaged, it may also help pay for expenses related to living somewhere else. Typically, most of these coverages are based on the replacement cost, which means that you'll get enough money to build or replace your property without considering depreciation. However, some policies might use the actual cash value, which does not consider depreciation. You can also find policies with inflation-based coverage. The second part, that is section 2, covers liability and medical expenses. It consists of two main areas. Coverage E under section 2 covers personal liability. This section protects the insured, that is all the family members living in the same house, against losses arising from legal liabilities. The insurance company will also pay for defense in a lawsuit. Insurance companies do not cover intentional injury to another or self-injury. This coverage may be included as a part of your homeowner's policy or issued as a separate comprehensive personal liability policy. Homeowners policy provide personal, not business or professional protection. Some policies can be endorsed to provide limited coverage for business or professional activities, but limited is the key term. Only specific business or professional insurance provides full protection. Coverage F covers medical payments to others. This coverage provides that if someone who is not living at the insured's residence is injured there, the company will pay for medical care related to that injury. Negligence is not required. If a friend is helping someone paint the house and falls off a ladder because of their own carelessness, then they can submit a claim to the homeowner's insurance policy. Although the homeowner did not cause the friend's injury, but the homeowner's policy will still pay the claim. The keyword for this coverage is basically others. So household members cannot receive medical payments under this section of the policy. The rationale for this exclusion is logical, obviously, because insured cannot be liable to themselves. All household members are considered to be insured. Therefore, no household member qualifies for medical liability payments. Step number 2 is choosing the right amount of coverage. Now, how do you know how much insurance you need? One way to look at the worth of a home is that it has 3 distinct values. First is the market value. This is the value that a willing buyer and a willing seller under no compulsion agrees to exchange an item at an agreed upon price. The second is the assessed value. This is the value the taxing authority places on the property and on which they base property taxes. Depending upon the community, this typically is less than the market value and is usually recalculated at least every 3 or 5 years. The third value to consider is the replacement value, that is what it would cost to rebuild the home as it currently exists. To make sure you have adequate protection, it is wise to get replacement cost coverage for at least 80% of your home's replacement value. Going for 100% is even safer. Personal property should also be covered based on its value, and this type of coverage can be bought separately if you are renting or leasing your home. Step number 3 includes factors influencing premiums. The cost of your home insurance depends upon various factors. Number 1 is construction. The materials, age, and maintenance of your home affect the cost. For instance, a brick house is more expensive to insure than the one with siding. Also, older homes might have older plumbing and wiring, which can lead to more issues. Next could be location. The area of your home plays a significant role. If it's in a fire-prone zone or area with high crime rates, your insurance might cost more. The distance to the fire department or water supply and accessibility also matters. Then deductible. Your policy's deductible affects your premium. The higher the deductible means lower premium. And the last is insurer. Different insurance companies offers varying rates. So some even give discounts if you bundle home and auto insurance. So shopping around every few years is a good idea. And step number 4 is exclusion in your policy. Your home insurance policy comes with some exclusions, things that it does not cover. Number 1 is ordinance or law. So changes in building codes might not be covered, and endorsement can help with these extra expenses. Next could be earth movement. Earthquakes or similar events may not be covered unless there is a specific endorsement. Then water damage. So damages caused by floods, sewer backups, or underground water seepage are typically not covered. You can add endorsements for some of these. Then power failure. If your home loses power due to neighborhood-wide outage, you might not be covered. Next could be neglect. Not taking care of your property can lead to coverage issues. You are expected to maintain your home. Next is war and nuclear hazard. Damages from wars or nuclear incidents are not covered. And then could be intentional loss. So if you intentionally damage your property, obviously it is not covered. And step number 5 is choosing a reliable insurance provider. When it comes to selecting an insurance provider in India, look for well-established companies. Consider insurers that offer bundled home and auto insurance for potential savings. Check their claim settlement history and customer service reputation to make an informed decision. Your home deserves the best protection, and now you are armed with the knowledge to make it happen. Remember, safeguarding your home isn't just a wise choice, it's a smart investment in your future. Sleep easy and keep your home and loved ones secure. Thank you for joining me in today's video. If you liked the video, let me know in the comment section about your thoughts on it. Thank you.